So today we're going to talk a little bit about how our investors are making money when they are coming in, investing with my team and I as we go out and we acquire large multi-million dollar apartment complexes throughout the country. So before we get into that though, I want to take a quick second and say, please subscribe to the channel. Our goal here, my team, we are huge, massive believers in real estate as a passive income vehicle. Our goal is to help educate as many people as we possibly can about the powers and the benefits of real estate investing, especially passive real estate investing. So subscribe to this channel, smash that like button if you get value here. Subscribing will help you get notifications every time we release a new video. More likes is going to allow us to reach more people and help positively impact more people and help them on their paths to financial freedom and wealth building. That's what it's all about. I don't know about you, but I was never a big fan of working my entire life to help make somebody else wealthy. I would rather figure out how to make myself wealthy. And so that's what we hope to do here on this channel. So that being said, so my team, we invest in real estate. I've done real estate investments for 8 years now. I've done single family fix and flips. I've done single family rentals, small apartment rentals. I have a wholesaling business. My favorite real estate investment is multifamily apartment complexes. The bigger, the better. Okay, there's a couple reasons that I really prefer that investment within real estate. But before we get to that, okay, I love real estate. The bulk of my portfolio, the bulk of my wealth is in real estate. It is less volatile than stocks, bonds, mutual funds, cryptocurrency. Actually, real estate has seen 3 to 4 times fewer downturns than the stock market since the Great Depression. So this is going back a pretty extended period of time. Think of real estate. I have a little girl, she's almost 14 months old as of the day of this recording, and so I read her a lot of bedtime stories. She looks at the pictures. And we recently read The Tortoise and the Hare, the story of the tortoise and the hare, right? I'm sure everybody remembers that. So I really kind of think of real estate as the tortoise, and I think of stocks and I think of cryptocurrency as the hare. The reason I say that is that stocks and cryptocurrency can have phenomenal increases over a really short period of time, right? Where real estate, you're generally not seeing these massive gains in a short time span. But because real estate is less volatile than stocks and crypto, you don't have those massive downswings, right? It's not uncommon for some of these high-flying stocks to have really dramatic downturns. Same thing in the cryptocurrency space, right? 40% up, 35% down. If you're in and you're out at the wrong time, you can really lose your shirt. And so since real estate doesn't have those dramatic swings up, number one, they have fewer downturns than stocks and crypto, but the downturns also aren't as dramatic. So your real estate investments are more like the tortoise, where stocks and crypto are more like the hare. I really think that every portfolio should have an allocation towards all of those three. I think you should be invested in every single one of those types of investments. And where you decide to put the bulk of your money is a really personal decision, and what your tolerance is for risk and reward, right? But that said, so I like multifamily over the other forms of real estate that I mentioned because of the scalability of it. Okay, so think of it. If I have 100 single family homes, or I have a property that has 100 units to it, let's say those units are spread out across 16 buildings, I have to replace 100 roofs with that portfolio of single family homes. I have to replace 16 roofs with my single property that has 100 units on it. You can look at that across the board um, from a maintenance perspective. It's a lot easier to maintain something when all of the units are on one location rather than having a maintenance person having to schlep all over town. It makes the property a lot easier to manage as well from a leasing and from a property management perspective. And it also is a lot easier to grow that portfolio, right? I have most people don't just acquire 100 doors at once. They start one at a time. They buy one, they add a second, they add a third, they add a fourth. When you have one home and that person moves out, you have no income, right? As the owner of that single family rental home, you are now floating the mortgage. Whereas my 100 unit rental property in that same example, I can have 10 people move out and I still have 90 tenants, residents on that property paying their rent every single month and covering not only the mortgage but all of the expenses. I'm actually still making money on that deal despite the fact that I have 10% vacancy. Okay, so there's a lot of different reasons that economically multifamily makes sense. But like I said, the point of today was to just go over really quickly how our investors actually get paid when they invest into a deal with us. So the way that our team operates is we go out and we find deals. Okay, we've got broker relationships. We're looking at well over 100 properties to get a good one. We're doing a ton of market research. We're looking at things like the long-term viability of the market. If there's a downturn, how is this market going to respond? Is it going to crash? Should it be okay? How insulated is it to these ebbs and flows in the economy? What's the job growth like? What's the population growth like? There's a lot of factors that we're looking into before we decide to kind of plant our flag in a market. We're also doing extremely thorough underwriting and analysis of every single deal. So those 100 deals that we look at in order to get one, there's a lot of due diligence, there's a lot of financial modeling that we're doing there. But we find a good deal, and what we do is we team up with a bunch of private individuals who invest into the deal with us, okay? So there's a bunch of people, they come in, they invest passively. Our investors there's no responsibility for making decisions. They don't have to manage tenants and toilets. They don't have to pick out paint colors. They don't have to do any of that stuff. Okay, so they simply just invest into the deal with us. Our investors are going to get paid out via cash flow distributions. Okay, so every quarter we make distributions, we make payments to our investors that essentially are taken care of by the tenants at the property, right? So the tenants are paying their rent to us. We take that money, and then once a quarter, we're going to make a distribution to our investors. Think of this like a stock dividend, okay? So throughout the life of the deal, our investors every quarter are getting passive income coming in. They've done no work for this. Their money is literally working for them, okay? Now, every year that we own the property depreciates. Now, this is something that not a lot of people realize the power of. There are massive tax benefits that our investors are able to realize through owning real estate. So real estate depreciates over time. That is known as a paper loss. So our investors, since they're part owners in the deal with us, they actually get to claim some of those paper losses on their tax return, and it can actually help them lower their taxable income. So they're making more money, but on paper, they've got some passive losses that they can use to offset some of the other stuff that they have going on, right? So our investors are getting cash flow every quarter. They're getting tax benefits every year that we're in the deal. And then our goal after approximately 3 to 7 years, every deal is different. So the time frame that we're going to hold that asset is different with every deal. But let's just say 3 to 7 years is the average. So during ownership, we are increasing the value of the property. Think of this like a big ass fix and flip, like what you see on HGTV, okay? The difference is, though, is that because it's a big apartment complex, we have tenants that are paying us rent every single month. So we're actually making money as we're doing this, like really large fix and flip as an example, right? So while we're owning the property, we're increasing the value of the asset. We're actually in the process of right now of selling a deal. We bought it for $4.876 million, $53,000 a door, and we're under contract to sell it at $79,000 a door, which is $7.2 million and change. So we've created $2.4 approximately million in value in that deal during the time that we've owned it. So when we sell that property, there's this really big gain that we are able to realize, and our investors are able to participate in that upside, right? In that gain that we've created. The way that we structure our deals, our investors actually get the bulk, they get the lion's share of the returns on the property. So this deal that I'm talking about right now, our investors actually get 70% of the gains and my team gets 30%. So our investors are getting quarterly cash flow distributions. They're getting awesome tax benefits each year that we own the deal. And then when we sell the deal, our investors are realizing a massive chunk of that upside that we've created in the deal. That's how our investors get paid. They're totally passive the entire time that they're in the deal. If you have any interest in speaking to myself or my team further about these kinds of deals, we've got our link in the details here in the video, www.investorboardroom.com. Check us out. We'd be happy to see if there may be an opportunity for us to work together. Take care.